G'day. I wanted to pose the question whether cash, term deposits and simple cash investments, whether they're risky or not. And I probably think it's fair to know when we look at all the asset classes, which we'll do, that cash and term deposits, those conservative investments, are often seen to be a very low or no risk. And I think that's true in terms of the potential to lose capital. Particularly when you've got government guarantees on certain bank accounts up to $250,000. You can say, well, the risk of loss of capital is minimal to none. So you get certain guarantees. But if we've got cash, Aussie shares, that also includes international shares and property, then on to fixed interest, that we've always seen these areas here, the growth areas, as the very volatile area. And we see that in the share market every day, that there's a lot of volatility, and people see that volatility as risk, whereas investing into cash, which includes term deposit or your same bank accounts, they see that as a good, safe investment. But where it becomes risky is over the longer term, and there's two issues I wanted to cover off on that. So if we've got a term deposit, the first point I want to look at is a term deposit. We've got $100,000 at the moment. Now we've got lots of clients that have term deposits, and we find they're a good, obviously make up part of a good balanced portfolio, but 1 to probably 3 year term deposit, 2.9% is the best we can do. Now, as a general rule, inflation runs, and this is the government's preferred or the Reserve Bank's preferred areas that are inflation, and that's the cost of living goes up between 2 and 3%. So when you've got low interest rate environments, and we believe that low interest rates are going to be with us for quite some time, around 2.9, potentially some tax for some people that aren't using superannuation, and we've got the cost of living going up by the same amount. If you're going to hold cash in this environment for the next 10 or 20 years, and we know that each year, as each year goes on, and CPI, the cost of living goes up by that, the value of this money, as in terms of what you can do with this money, is decreasing all the time. So that's a huge risk over a longer term. Short term, is there any risk with holding cash? Well, no, there's not. It won't go backwards. You're guaranteed that. And that's where I believe there's huge risks that people take by investing into cash. The other one I wanted to cover off on was what we saw during the GFC. Now, just prior to the GFC, Treasurer Swan came out and said, the economy's booming, the economy's going well, the commodity prices are going through the roof, you better lock in your home loans before it goes up. And that he pretty well picked the peak of interest rates just before the GFC kicked in. So say that was around, a lot of people locked in some home loans at that, and we could probably get a term deposit, a longer term deposit of 6% pretty comfortably. So you could have a term deposit, have $1 million invested in a term deposit, and you're going to get a really nice income of $60,000 a year. Then all of a sudden we have GFC kicks in, governments want to pump their economies to get it moving again, so the first thing they do is they reduce interest rates, and that's what happened. So, and as we can see, this is what's happening right now, 2.9, 3%, 2.8, depending where you go to. So let's say at best, we're at 3% now. So the same person with $1 million to invest, instead of getting 60, you've actually had your income cut in half. And living on, $1 million obviously sounds like a huge amount of money. You'd get a little bit of pension. But from an income point of view, if you're a conservative investor, by being invested into cash and term deposits, you've taken a huge risk, and you've seen your income halve over the last probably 8 years. So during that same time, dividends, and when we saw obviously the share market being very volatile, while dividends may have come off a bit, they didn't come off 50%. So when you're considering long-term investing, these are the areas for your long-term money. give your money a chance to grow in companies that grow their revenues and therefore grow their profits and therefore increase dividends payable. Down here, cash really doesn't do anything. It's not going to grow its revenue. It's really just based on interest rate. So cash does nothing. Good short term, good for the sleep at night factor as part of a diversified portfolio, but please keep in mind that there is risk with cash and term deposits. So I hope that was an interesting one, and we'll speak to you soon.